friends, hello. Well, yesterday we experienced, you could say, some historic events, didn't we? I believe that most people don't yet fully realize just how much Trump's recent announcement and the new tariffs could significantly impact not just the crypto market, not just the stock market, but the entire global economy and international trade as a whole. This slightly changes the rules of the game. Today, we will talk about this. Yesterday, Bitcoin reached as high as 8 at one point, meaning $1,000. After that, we saw a sharp pullback, just like after 500. So today, we'll be discussing what exactly President Trump said and how these new tariffs could potentially affect market movements in the near future. And of course, we'll take a look at the current market stages. Let's get into the charts. Friends, be sure to like this video. I also strongly advise subscribing to my Telegram channel to ensure you don't miss any important information or market updates. Visit and subscribe. The link is right below the video. My Telegram channel is right here. Now let's get down to business. So let's take a look and see what was happening at that particular moment. Bitcoin soared to the $88,000 zone, reaching these impressive volumes and then eventually dropped back down. Interestingly, look at how this appears on the daily time frame. Initially, we took liquidity, pierced through, and then fell back under the daily moving average. Subsequently, we fell under the main resistance zone marked by the yellow lines, and eventually, we fell under the blue line as well. This is the maximum trading volume of this specific structure. Now let's go into more detail. On one hand, remember, I made a previous review and said that when we were in this zone, there was no point in opening long positions. Despite this, Bitcoin continued to rise. But now let's see how things really stood. When we were in the $83,000 zone, I said there was no point in opening long positions because the risk-reward stop would have to be placed somewhere here. Our targets would be here. Our risk-reward ratio is 1-to-1, meaning the position is mathematically unprofitable. I trade with a minimum risk-reward ratio of 1-to-3. A 1% loss with a potential profit of 3%. This is a clear example of why it made no sense to open a position. We went, took the target, and rolled back. If the price had gone against us, we would have just incurred a loss that wouldn't have been offset by the profit. Yes, just statistically. Now we have a question. What's next? But in order to understand how to proceed, we need to first take a look at what was actually said there. So, we currently have tariffs imposed on goods coming from a total of 50 different countries. These tariffs are absolutely gigantic. I published it on my Telegram channel. You can visit and take a close look accordingly. What does this tell us? It informs us that trade wars have now commenced for real, not just in words, and these are indeed international trade wars. Essentially, we can be quite certain that the United States will inevitably face some counter-sanctions and tariffs. These measures will undoubtedly complicate interactions and relationships between countries, making international dealings more challenging. This could potentially be dismantled, and naturally, it will have an impact on the economy. Predicting how the market will behave in the coming days and weeks is absolutely impossible. It's difficult. In general, we've never seen anything like this in our lifetime. For example, let's see what was happening with the S&P 500 at this time yesterday. First off, remember, we went down to the 200-day moving average. I mentioned that our priority here is downward. Yesterday, in the moment on the news, we didn't just slide down. We pierced the most critical support level, the 5,485 zone, and now we're trading right on it. It's important to see how America will unfold. There is a very high chance it will open negatively and we will drop further. If we fall below this level and consolidate, our target is 5,164. If the S&P 500 hits 5,164, the crypto market will take a significant hit. We could see Bitcoin in the $53,000 to $73,000 range. It's necessary to be ready for this. Predicting how the markets will behave at this point in time is something we absolutely cannot do at all. We haven't seen anything like it. But some analysts say that Trump will definitely cancel all this, that he's just trying to scare people. I don't understand why or for what reason. Trump's main slogan, "Make America Great Again," he says. This means bringing production back to the country, trading within the country, and developing industry sectors domestically. Essentially, these tariffs on goods are all aimed at achieving this goal, which is to help the economy grow and thrive within the country. Let's check out what else is interesting. Please display the results directly on the screen so they can be viewed. Tariffs have been introduced for 50 countries, and accordingly, they make up 50% of the total tariffs, with 25% on cars, for example. What's really intriguing is that he has some plans to change the taxes and maybe even cut them, which would result in a historic low for tax rates. Could this have a positive impact? There might potentially appear some free liquidity, something like that, what we don't know. Or rather, that's why I say it's hard for us to predict how events will unfold in general. Over the next few days, we can only guess. Nevertheless, let's try to speculate on what might happen with Bitcoin's chart and how we should act in this situation. But first, friends, a quick traditional reminder. If you're trading in the crypto market, always use a quality exchange. Bybit Exchange has been a reliable partner for many years. If you don't have an account, I highly recommend registering and trying it out using my link and promo code below. Get the best commission rates and up to $30,000 in bonuses on your first deposit. If you register through the app, use promo code 24676. This isn't financial advice. I just really like this product. So if you haven't tried it yet, give it a shot. If you like it, great. If not, no worries. Also, friends, for everyone who trades on the seas, we started our trading community a while back, and it's a place free of spam with a purely professional atmosphere, setups, and positions. Join us and use it absolutely for free, available through the single link below the video to the trading chat community. But now let's proceed. So, the number one is in the $82,000 zone. A support level has formed right here, and I'm considering opening a position with targets set around this area. Again, 88 is possible, but in my opinion, the risks are quite high here because once again, we do not know how the United States will open, what will happen in the markets overall, and how we will actually feel in the next couple of days. There's a strong chance that we will hit the resistance level once again and then drop even lower. So for me personally, the relevant levels still remain at 78 and 79, and also include the zone of 73 and 74. Why do I trouble myself with two key pieces of advice that are more global in nature? So option one, this is a story that will cause some local negativity and we will revert back to the beginning here. You can trade the bounce here, then pull back to the 73 to 74 zone, see another local bounce, and then move to the 63 to 64 zone from where we will see growth. Yes, and this fits into the negative scenario that might potentially be happening now. Could there be a reverse scenario? Perhaps we might be misinterpreting the news, misunderstanding the tariffs, and generally not understanding something. In the global economy, we can only make educated guesses at some things and will never truly know the essence of it all. It's as if everything is covered in a thick layer of some kind of confusion, making it hard to see clearly. So what other options do we have available to start right now? In this range, we can form a structure, meaning we bounce up, go back to the 88 to 89 zone, then return down, and then somewhere around here. If a trading structure like this forms in this zone, the probability of breaking out upwards increases significantly, for example, to zone 97. Then there might be a bounce down to this same structure, a return for confirmation, and from there, a move upwards, possibly towards historical stocks. This sequence of movement suggests a potential upward trend that traders might find promising. I also consider this scenario possible, but we'll find out exactly how events unfold in the coming days, maybe within a week or so, once we understand how the tariffs will impact everything and what the rhetoric from banks, economists, and President Trump himself will be. Accordingly, in my local area, the setup is around $78,000 to $79,000, with the garden targets of America being aligned accordingly. Approximately within this range, yes, a bit further below is the zone of $73,000 to $74,000, with targets once again, for example, somewhere around $82,000 to $84,000. Then there is the zone of $63,000 to $64,000. Again, can you open long positions from the current levels? In my opinion, you can set a short stop loss with a target range. It's not a favorable position and carries high risk. This is a high-risk position, but it requires compliance. Think for yourself. I'm exclusively sharing my thoughts here. Here's the situation around 900. It's very important to witness the market opening today and observe what will actually happen there. Otherwise, once again, we have some really interesting events opening up for everyone. We are in the front rows with you and will be observing. I'll post any updates on my Telegram channel. That's all for today. If you haven't subscribed yet, make sure to hit that subscribe button. If you found this video helpful, please give it a like. This is very important to me. Share your thoughts in the comments below. Feel free to write any comments. It's important to me as I'm starting this new channel. That's it, friends. Thanks a lot. See you soon. Bye-bye.